So today I will be going through the types of lease end. We have four different types of lease end. First one is natural lease end, then termination, purchase option, and casualty. So now let's look at natural lease end. So natural lease end is if when the end date of terms and condition has reached, and if we don't have an option to renew the contract, then we can perform lease end and close the contract. When the contract reached the end uh, of TNC, we need to complete the following process. The first one, the validity of the contract is lapsed. Then we need to make sure we have posted all the postings. Then once we have posted all the postings, we will the lease end button will be activated, and we perform lease end, and then we perform the close. To identify the contract that have lapsed, we can use contract expiry report and data quality integrity report at AG level. Here we can see the contract expiry report is taken as of 1st March 2022, and the number of month is 1. So the report will give you all the contracts that are going to be expired in 1 month. This report will help us to plan ahead. And in a data quality integrity report, we can filter the contract end date and identify the contract that are going to be lapsed. Now, as to the workflow, once all the transactions are posted, the lease end button will be ungraded, and then we can set the end date, and then we can close the contract. So for natural ending, the liability accounts will have no balances, and we have an asset retirement entry to remove the asset from the book. So we are debiting the accumulated depreciation, and we are crediting the ROU asset. Now, on to the importance of lease end and close. If the validity of the contract have lapsed, and if the contract is not closed, the reports will be affected. So if we take a look at the activity analysis report, we can see the difference between the GBV as per the report and GBV as per the all column schedule, and there will be a difference. This can be avoided or corrected only when the contracts are closed. Do anyone have any question? We had few tickets where there was a difference in the activity analysis report. So this is one of the reason where there is a difference in activity analysis report. So if the contract have lapsed and it's not closed, then there will be a difference. Once you are closing the contract, that difference will be rectified.
Yeah, so this is something that we wanted to insist a bit on because if the contracts are expired, it means that the retirement entry for the asset has not been posted. However, in terms of the schedule, as we move on and we are in a future period versus the ending of the contract, then the ending ROU asset balance in the schedule will be 0. So this with this comparison, you will have a difference. So that's what you are seeing. So very important to remember that the activity analysis report and all our disclosure reports are based on the all column schedule. So once you moved on and you are in the future versus the ending of the contract, the balance will show 0 in those contracts.
So as long as your contract is open, you should still see an ending balance in the ending ROU asset balance, but the schedule would be 0. Is that correct?
For the schedule will be 0. So yeah.
But the other balance will reflect what the actual postings.
Yes. So that's
Okay.
why we'll have a difference. It's an indication that it's an expired contract.
Okay, thanks.
Any other question? No. Okay. So now we can move on to termination. So termination may be added to reflect an early termination clause negotiated in the lease contract. The termination can be added at inception and then reassessed to excise them when the terms are confirmed, or it can be introduced via a lease modification event. So the process will be, we add a termination event, we excise them, and then we make sure all the transactions are posted, and then we perform the lease and close the contract. Again, we can use a contract expiry report and DQI at AG level to identify the contracts where we have termination option excised or unexcised. So for example, here in DQI, we can see the expected TNC end date as well as the termination option if this has been excised or not. If it is excised, it will show as true. Otherwise, it will be false. So as to the workflow, for example, sorry about that. For example, let's say we have an active contract here. And in June 2022, we decided to terminate the contract in August 2022. So we can do a lease modification at contract level. And then we add the amendment date and the reason code. Reason code will be to add new term. And then we go to the lease component level and add the lease end term. And then we select the termination option. We can give the penalty amount over here and the termination date, and we submit it. And then we activate the contract and go to the activation group level, and we excise the termination term. And then we set the effective date, that will be June. That is when the changes are to be reflected. And we merge the draft. So yes. So introducing an early termination will trigger a lease adjustment for both ROU as well as the liability amount. Mostly it will be reduction because we are foregoing the payment from August to December. Then we continue with the workflow. We need to do the lease end and then close. And depending on the terms and condition, any remaining balance in liability account will be settled during the close. And this is the asset retirement entry, where we debit the accumulated depreciation and credit the asset. There won't be any loss or gain on asset disposal unless the termination is applied at the same period as the targeted end. Do you have any question regarding termination?
No questions. We can proceed.
Yeah. Now, moving on to purchase option. This is another lease end term we have in Nakisa. So similar to termination option, purchase option can be added at inception or through a lease modification of contract. The process will be, we add a purchase option. We exercise the option. We exercise the option and then we post all the remaining transactions. And then we perform a lease end and close. We can identify the contract that have purchase option either excised or unexcised using the contract expiry report or the DQI report. And we can introduce an early buyout event either through a lease modification to add a purchase option or through a reassessment if the purchase option term is already included but unexcised. So for example, we have an active contract from January to December 2022. And in June 2022, we decided that we will be purchasing the asset in August 2022. So we can go to the contract level and we initiate a lease modification. We need to give the amendment date as well as the reason code, which is again add new term. Then we go to the lease component level and we go to terms and condition, and then we add a new lease end term. We can add purchase option, and we need to make sure the early buyout checkbox is on so that the payment stops after this particular date. And then we go to the activation group and exercise the purchase option. And then we activate the activation group. So again, similar to what we have for termination, excising a purchase option creates adjustment to ROU and liability. Since we are not making the payment from August, liability will be reduced as well as the asset. Then we continue with the workflow. We do the once we make sure all the entries are posted, we can do the lease end and close. And an asset retirement entry the asset retirement entry will be posted, and it will show the transfer of the asset, ROU asset, to a owned asset. Do anyone have any question? Okay. So now moving on to casualty. So in case of a sudden unexpected loss or damage to the leased asset, we can add a casualty event. The process here is a bit different. So once we apply a casualty, the status of the activation group changes to lease end, and then we close the contract. So here the casualty will be applied in an open period. So we must ensure all the periodic postings are completed before the targeted date of the casualty. Once casualty event is complete, the AG status will change to lease end. And following lease end, we will post the payment and accrual entries. And also an asset retirement entry will be created once casualty is complete. This event will always trigger gain or loss related to asset disposal. Casualty is the only event where the retirement is triggered before the close. And casualty is also the only event where the lease contract and where the user are able to post entries after the lease and status is in force. So we can post entries after the lease and status. And then we can, once all the remaining entries are posted, then we'll be able to trigger the close. Okay, so thanks a lot for attending today's office hour. So in case if you want to discuss any topic, you can email me or Catalina, and we can definitely look into it for the next session.